All right, well, the stock market is officially open for trade, our final full trading day of the week. The market closes early tomorrow for the July 4th holiday, and it is actually closed for the entirety of the day on the 4th itself. Well, joining me to talk about the market as the second half is now underway and stocks remain near record highs despite ever so slight losses at the open is Sean O'Hara. He's a president at Pacer ETFs. Sean, joining us from Pennsylvania this morning. Good to have you on the show. And what is driving the market in your view this morning?
Well, good morning and thanks for having me on. I think, the winds are changing, if you will. We had, during the first half of this year, we had three major headwinds. We had tariff uncertainty. We had, confusion and concern about the big, beautiful bill and the taxes that go with that. And then the Fed policy. I think two of those three things are going to turn around here. One is, looks to me like the big, beautiful bill will get done. I think that's a big boost of sentiment for the market. I don't believe that the tariff policies are going to be as inflationary perhaps as the Fed does. I don't see any evidence so far this year. And so then we'll have to see what the Fed does going forward. But I think there's been a big change here. And I think the second half of the year, I think there's more optimism for equities than there was in the first half of the year. I think there was some concern, confusion, lack of clarity, and things of that nature.
Yeah, uncertainty, I think, probably is the word that we heard most often down here on the trading floor among people looking at the markets on a regular basis. So when we look at the second half, just a few days in, the second day in officially, Sean, do you see broad-based gains, or are there specific sectors that you anticipate will outperform?
Well, I think if you look at what's happening, I think you're going to have tech and semis continue to sort of be the lead, if you will. I think, energy, is not necessarily positioned at, $62 or $63 a barrel, although they still generate a lot of free cash flow and they're insanely cheap. On our metrics, healthcare looks cheap. So it didn't do very well in the first half of the year. Perhaps it'll rebound in the second half of the year. And I think financials, was the big winner for the first half of the year with, almost a 9% gain. We'll have to see what happens as concern about some of these refinancings on some of the commercial mortgages come through. And we have to pay close attention with financials to, late payers and potential defaults.
Yeah. All right, I do want to talk about the jobs picture because, of course, that is a key part of the Fed's dual mandate. You mentioned inflation earlier, jobs as well. The ADP private sector payroll report this morning, disappointing, showing a loss of more than 30,000 jobs, in fact, last month, despite expectations of a gain of 100,000. And economists forecasting 110,000 jobs, in fact, added in the month of June when we look at that non-farm payrolls report that is due out tomorrow morning. How does the labor picture factor into what we're seeing and could see going forward with equities?
I think it's not as big an input as some others would be. You have to keep in mind with regard to these jobs reports that we're basically at full employment. So, getting significant employment growth going forward from our current resting place to full employment, I think is going to be a challenge. I think on the margins, I think people are starting to look forward. Companies will deal with this tariff issue by trying to streamline their operations. And so you could see some at the margins cutting of the workforce in places where they think they can get by with fewer. I think AI is going to have a little bit of an impact on that. So I don't necessarily think the market pays that close of attention to the job market, with the exception of whether or not what's going on there is enough to get the Fed to finally move.
Yeah. So the Fed is next meeting at the end of July and has basically broadcast that it does anticipate still a wait-and-see approach, but that tariff deadline of July 9th is set to take effect next week, Sean. Let's first start with the tariff deadline, what you anticipate there, and then, of course, how that might inform the Fed.
I'm not sure the negotiating's over, if you will. I think the president's going to essentially say on July 9th, here's the deal. You have to live with it because you didn't get together and work with us. But I think, much like he made the big, massive, bodacious announcement with the big placard he held up showing what the rates were going to be and then sort of move forward. I think there's more negotiating to go on. I think there's a lot of positioning happening right now. And I think eventually this will all take care of itself. And I don't think that the new tariff approach that the current president is using is going to have a major negative impact on future earnings going forward.
Okay, so if the Fed does stand pat on rates at the end of July, is that downside pressure on equities?
I think it's been pretty well signaled. I think the market understands where Chairman Powell is coming from, even though that maybe some people might not agree. I'm one of them. I think it's time for them to start cutting. But I don't think them not doing anything is going to have a major effect on the stock market. If you look at the last meeting they went through, we've come through that and continued to push higher on equities. And so I think it would be a nice additive, if you will, a little bit of a tailwind if they would start to move short-term rates down a little bit. I think that would help the overall economy. I think that would help the overall consumer. And like I said earlier, I think they're a little bit late on this, much like they were a little bit late in terms of raising interest rates when we had that quote-unquote transitionary inflation going in under the Biden administration. I think the transition here is not going to be as impactful as they say. And it is kind of ironic that they're putting all of their emphasis on what they think might happen with tariffs when there's really no evidence that the tariffs have increased prices.
Interesting. Sean O'Hara, president of Pacer ETFs, thanks so much for joining us always.
Thank you. Appreciate it.
All right.